Hi, today we're talking with David Hamilton of SunGard, and we're going to be talking about customers in the retail banking world. So there's a lot of talk about customer experience and customer expectations in the retail banking world. So, I mean, what are customers looking for?
That's a great question. We tend to think about customer expectations in four different ways. Probably the highest priority when you speak to retail consumers around the world is trust. And trust was the first thing to get eroded during the financial crisis. Any research paper now would show you that since the crisis, trust has fallen considerably between consumers and their financial institutions. So rebuilding that trust is the very first thing that customers expect, and indeed what we would recommend and counsel our clients really focus on. The second thing is convenience. We've seen an explosion in terms of technology innovation, and it's important that banks come to terms with the variety of different ways and means in which customers will want to consume products and services from their institutions going forward. So whether it's social media platforms or mobile platforms, internet platforms, or through the branches themselves, that convenience factor is, we think, probably the second most important thing. Thirdly, we talk a lot about individualized service. We can customize essentially any mass-produced product today with the exception of financial services. And we think there are many lessons to be learned from the consumer markets for retail financial service providers to look at providing increased levels of individualized service for their consumer base. And the last one would be value for money. If you look at the customer attrition rates, if you look at how easy it is for customers to switch banks, a lot of that switching is both convenient. There is a level of convenience, how easy it is for me to switch, but a lot of that motivation is driven for price reasons. It's cheaper for me to get this loan from Bank X versus Bank Y. It's more convenient, it's easier for me to access, but price point decisions are the things that are really driving customer attrition today. So we think value for money is probably the fourth most important factor when thinking about customer experience today.
So how do banks balance that need to meet those customer expectations with their need to have profits?
Well, that's a great question because, there are indeed two sides to the coin here. There are two, if you like, different and sometimes competing agendas when we talk about customer experience management. The first one is the customer's agenda with the bank. What is it that the customer wants to get done through their financial institution? And then, of course, there is the bank's agenda in terms of their relationship and their objectives for their customers. And it's important that banks understand the distinction between those two agendas and make sure that they do their best to find mutual satisfaction of both sides. So what we tend to describe to a bank or to one of our clients is focus on three things. Firstly, focus on making sure you've got the right customer demonstrating the right behavior. Okay? That's most important in terms of driving the right level of risk-adjusted profitability from each customer. The second thing is make sure that you intelligently generate sales opportunities for your front office. Don't just flood the front office with generic sales offers. Make sure that those sales offers are very targeted to the right customer at the right time with the right product. And thirdly and lastly, make sure that all of the interactions you have with your customers are truly optimized. And what we mean by that is there are defining moments in every single interaction a customer has with a bank. And it's understanding those defining moments and making sure that your front office staff are spending more time with customers during those defining moments and less time with systems and back office IT solutions so that they really get the most out of those interactions, because those interactions hold value and it's important that we leverage that value each day.
So is there a way for a bank to optimize those interactions so that they meet overall customer expectations but also target products to specific customers in the right way?
Yeah, that's a very good question. What we tend to see is because product portfolios have expanded very rapidly over the last 10 years, banks have become very broad providers of financial services. So it's not just about deposits and loans anymore. It's about insurance and credit cards and a lot of different products. Often, we see those products being serviced out of different back office IT systems. And what you're challenging the front office with is the need to deal with multiple back office systems to service very simple customer requests. So take a change of address, for example. You know, if a customer walks into a branch to change their address, often what happens is that front office person is dealing with back office systems in order to make sure they fulfill that request very smoothly and very efficiently, and spending less time understanding why the customer moved. Did they move up market or down market? Did they move to a new region or a new suburb because somebody in the house has got a new promotion? Did they move into a new house that the mortgage was provided to by another bank? There are lots of questions in that defining moment that the front office staff member really needs to focus on. So automating those back office systems, becoming a more process-centered organization is something that we advocate very strongly amongst retail banks around the world.